Today I'll be, going through a very introductory session on binary options trading. A lot of this will be review for some people. A lot of this will be new to some people. But yeah, before I get started, thank you, Christian, for having me here again. And I don't know, Christian, are you still in the call? Okay, because data was bugging out earlier. Cool. So I guess I'll just get started. But guys, yeah, let me know in the chat right now. Who's the first time seeing binary options today? Is this the first time you're seeing binary options trading, or it's something you've seen before? Just so I have an idea of what we got going on the call today. Let me know in the chat. Let me know in the chat if you've done binary options before. Yes. Oh, this is my first. Awesome. Cool. All right. Yes. Okay, awesome. So we'll get started, guys. So before we get started, guys, my name is Aabid. If you guys haven't heard about me before, I'm one of the GC traders, specifically in the binary options kind of market. But today I thought it would be a good opportunity for you guys to kind of learn a little bit from me. I get to share a bit of my knowledge, and hopefully it can come to benefit for you guys. But having said that, let's get started, guys. Today we'll be starting from the basics. We'll be talking candlesticks, we'll be talking trading view, we'll be talking what tools to use when we're trading binary options, and then we'll have a little bit of a Q&A session if you guys have any questions at the end. But yeah, and if any of this sounds foreign to you, don't worry, we'll be covering all of it. So let's get going. So first topic we'll be covering is the idea of candlesticks. Now, when it comes to candlesticks, guys, everything that you see in the financial markets, whether that is the foreign exchange market, the binary options market, which is a subset of the foreign exchange market, or the crypto or the stocks market, you often see these weird bars of green and red. Right now they may be different colors, but that's generally how we see it, and it's common through all of these markets. Right now, what do these candles even mean? First of all, they're called candles, they're not just bars, they're called candles. So what do these candles mean, right? So we got two types of candles. We got a green candle, which is a bullish candle, and a red candle that is a bearish candle, right? So when it comes to the bullish candle that you see on the left-hand side, it is a going upward candle, right? What does that mean? So that means that for that specific asset exchange rate that is currently been looked at, right? Let's say we're looking at Bitcoin, for example, right? If we see a green candle on the Bitcoin chart, then we see that we have an opening at the bottom side here, and we have a closing on the top side here, right? Now, if you start something at the bottom and you end at the top, then the general direction is an upward momentum, right? An upward direction. And that is usually signified using a green candle, right? That means that for that specific candle, which can represent a certain time frame, the price moved up for that asset, right? Now this applies in the foreign exchange market as well. Let's say you're looking at the exchange rate between the US dollar and the Canadian dollar. If you see a green candle, that means for that specific time, the price of that exchange rate went up, right? And we'll talk more about the exchange rate itself, but that's just to keep in mind. Now we have these little areas at the top, right? These little lines that come out. They are considered wicks, which are basically the highest point that during the time frame it reached, and the lowest point that during that time frame it reached. So let's say we have a 5-minute time frame we're considering. The highest it reached during that 5 minutes before it closed over here was around here, and the lowest that it reached before the candle closed was around here, right? Before the candle closed here. Now, for the bearish candle, it works exactly the same way, but in the opposite direction, right? We have the exchange rate or the value of that asset going down for that specific time frame, right? And we'll talk more time frames, but let's say we're looking at 5 minutes again. During that 5 minute, we started the value of that asset started over here and then close over here, right? And then similar to our bullish candle, we have these wicks that go up to a max value and then go down to a lower value. So that's the bearish candle where the price moved down, right? Now, how does this all come into action? So what we use for pretty much a lot of these different financial markets to kind of analyze the data, analyze the charts, how the price is changing for these assets is something called TradingView, right? So TradingView, you can think of it as like your pretty much like your study guide before you actually give the test, right? So you got to make sure that you study the charts and the graphs properly before you go ahead and put in a trade, right? So that's the analogy I like to use. So let's take a look at TradingView. So the website that's for that platform is simply tradingview.com. So if we go to that website, something like this may open up. If it's the first time that you're using this, then you may need to create an account, and you can create a free account. But once you kind of get to that, you have this kind of page that pops up, right? And then if you click on products and then click on chart, that will show you once it loads up, it will show you a chart. And let's say like I didn't have anything else here, so I'll remove let me just remove all my drawings and my indicators, right? So this is something that you would probably see if it's your first time using TradingView, right? So this is just a visual representation of how the price has moved over a span of time, right? So at the bottom, you can see that, okay, like within this little screenshot, you can see that the price has moved from, 14th November, which was yesterday, up until present right now. And then the more you zoom out, the more you can go backwards in time, right? But as you can see, we talked about that all of the movements in the pricing are depicted using a combination of bearish and bullish candles, right? Now, again, you can change the color of these, but I like to keep them the same. Bearish where your candles are red and bullish when your candles are blue, right? Now, over here, remember how we talked about that when we're looking at these candles, it's showing the fluctuation or movement of the price of a specific asset, right? Now, this asset can be an exchange rate. As we see over here, the exchange rate is for the Australian dollar and the US dollar, right? But you can do the same for anything else, such as Bitcoin, right? Now, we won't be covering crypto today, but in terms of the foreign exchange market, we'll be seeing, more of these pairs where we have combinations of currencies and how the pricing is kind of moved, right? So this is where all of your analysis will be done. Again, we won't be getting too much into the analysis side of things because I kind of want to show you how the market itself works, how to take trades, et cetera, et cetera. But this is the platform where I do my analysis before I take any trades or call out any trades for anyone else, right? So at the top, yeah.
Sorry to bother you. You have some people in the waiting room.
Some people in the waiting room. Okay. I'm gonna disable the waiting room for now, so I think everyone should be able to come in. Okay. Let me know if there's still an issue, but I think we should be good. But yeah, getting back on track. So we talked about time frames, right? So this is the time frame that we see over here. Right now, you can see it's selected on the 5-minute time frame, which means every single candle that we see here is representing 5 minutes, right? So let's say we look at this blue candle right here, right? So first of all, we know that this was a bullish candle where price moved up. And we know that this was a bullish candle for a 5-minute time frame, right? And you can play around with the time frames. You can look at the 15, 30, 1 hour. You'll go from kind of seeing the broader picture to a more macro level picture on the lower time frames. So that's pretty much kind of like the main tools to see here. And then we got like some cool tools over here, right? If you want to like type some text, you can just type it right here, like something like analysis on the New Zealand dollar, right? That will pop up here. And there's a bunch of different tools here. We won't get too much into that right now. We will, if needed, we'll cover that one of the later sessions. But this is where all the analysis is done. I just wanted to give you like a brief introduction to what's available. And over here on the right hand side is where all of the exchange rates and the assets are kind of stored, so you can switch in between them, right? Now let's say you don't have a specific exchange rate or an asset here. All you have to do is click on the top left and you can search for it, right? So let's say you wanted to search for, I don't know, let's do Euro USD, right? Now this one I already have, but let's say I didn't have this one. I just simply click on it, right? And then there's different sources. I like to use the Owanda source. There's many different sources that you can use. Again, you can play around with this, but this is the one I like to use for all of my analysis, the Owanda one. So when I click on that, the chart for that exchange rate pops up. And if I want to add it to my watch list, I can simply right click on my chart, click on add Euro USD to watch list, and it's already added for me, so I don't have to worry. But if it wasn't, I'll just click on this and it'll pop up here. But that's pretty much the basics to kind of get you started with TradingView. But yeah, getting back to the presentation. The next thing I want to cover is Forex Factory, right? Now, when it comes to Forex Factory, what it tells you really is news, right? Now, why is news important? Because news can affect the way we trade, right? Usually, when there's news, the market tends to react in a different way than it would when there's no news, right? So it's important to kind of check what's currently going on. So this is the live kind of chart for today, right? So we can see earlier at 8:30 a.m. we had some news on the US dollar, right? And then actually in a minute from now, we're going to have some news on the Australian dollar, right? Now, let's kind of break this down. Over here, you see the timing of that news. You see the date, and then you see the currency. And what that means is that for that specific currency at that time, there's going to be some news that would potentially be impacting the exchange rate of that specific currency, right? So just something to keep in mind when you're trading. Right now on the fourth column here, you can see the impact of that news. So generally there are 3 levels of impact. Yellow just means it's a low level impact news, right? Red means it's a high level impact news, and orange means it's a medium level impact news. Now, when it comes to trading, what does that mean? Usually when I see a yellow folder, it won't bother me too much because it's a low level impact. I'm still gonna trade normally. When I see an orange, right, that's a medium impact news. Then I know for any currency exchange that has the GBP, right? So for example, GBP USD or Euro GBP, right? Any combination that has at least the GBP pair or the GBP currency within the pair, I'm going to be a little cautious, right? Because it's a medium risk news. It can have an impact, it cannot have an impact because it's kind of, it's not severe, right? Whereas something like the red over here, right? So the red folder on the GBP, I know that this is going to be a high impact news, right? So personally, for me at that time, if I was trading at 2 a.m., I would not be trading any pairs that have the GBP within that currency pair, right? So that's kind of how you use this website to kind of dissect how the news can be affecting the markets, right? Now, some people like to trade during news, right? Some people are like, okay, I think I know how this news is going to affect the market. So I'm actually going to use this to trade with the news, right? I personally don't do that, but I kind of use that as a caution to stay away from the market for that time, for that currency. But again, it's kind of up to you, right? Like what you want to do. I personally use this as kind of like my risk guidance on what to trade and what not to trade. Now, how does this all tie into binary options, right? So we looked at a few tools. We looked at candles. We looked at Forex Factory. We looked at TradingView, right? Now, how does this all come together? So first of all, let's kind of break down what binary options is, right? So it is a time-based trading, and it's within the foreign exchange market, right? So earlier we said that, hey, we got like, some major financial markets such as the foreign exchange market, the stocks market, and the crypto market, right? Now within foreign exchange market, there's actually, two subsets generally. One is the traditional forex and one is binary options, right? So binary options is actually the foreign exchange market, is just a different style of trading within the foreign exchange market. Because first of all, it's time-based, right? So if anyone who's been trading like traditional forex where you have like stop losses and take profits, it's different than that, right? In my opinion, it's much simpler than that because you will really only have two options, right? You either buy or sell, right? When I talk about buy, I'm referring to the term call, right? So it's usually goes by call, or when you're selling, it usually goes by the word put, right? Now, like we said, you can use the binary options on any currency pair, such as the USD Canadian dollar, but you can also use binary options on other assets, such as Bitcoin, right? I personally only trade the foreign exchange market. Sorry, the foreign exchange currency pairs within the foreign exchange market for binary options, but that's also available, again, depending on the broker that you use. But it's really simple, right? Like you either win or you lose. There's nothing in between, and you only have two options: buy or sell, which kind of simplifies things in my opinion, right? And the other thing is that the payouts are predetermined, so you know exactly how much you're going to be making before you even place the trade, right? And we'll take a look into that. And usually within the binary options, since it's a time-based trading, we also tend to take shorter trades, right? Usually between 1 to 5 minutes. So it's kind of like, quickly you're in and out of the market. You only have two options. So you kind of do your analysis and see like, okay, currently based on what I'm seeing, is the price going to go up or is the price going to go down, right? So if we see this little picture over here, let's say our white line is kind of showing the movement of price. And at this point, we're like, okay, I want to enter the market, right? Everything is really simple. You either call or you put, right? Now, obviously, which one you choose is really important. Otherwise, you're going to be, losing money if you're just randomly choosing, which is where the whole analysis and the trading view and the Forex Factory come into play. But really, all you're doing is trying to figure out if the price is going to go up or down from the current position that it is in. Now, having said that, how do you know when to call and when to buy, right? Now, generally, a call is made when you expect the market price to go up, and a sell or a put is made when you expect the market price to go down, right? Pretty straightforward. But how do you find out, or how do you kind of analyze if the market is going to go up or down? That's something that we will be covering in one of the later sessions. But before that, we want to think about risk management, right? Now, when it comes to trading or investing, the biggest thing about before you even think about trading is managing your risk, right? Now, when it comes to binary options, I'm risking anywhere between 1 to 3% of my account. Which means, like, let's say I have $100 account, I'm risking anywhere between $1 to $3 for a specific trade, right? That's the risk management that I like to follow. Again, you can customize this based on your preference, but the whole idea is to be consistent with your rules. Otherwise, you're going to see, varying results over time, which is why a lot of people don't end up being successful in trading, because they're like, okay, I feel like I'm making some good, I'm winning a lot of trades, let me risk a bit more. And then they end up losing their trades, and then, the whole spiral happens, you can tank your account. So it's really important to follow risk management rules. So these are rules that I follow, right? So 1 to 3% risking per trade. You want to aim to win 2 to 3 wins per session, right? So let's say I want to trade at 9 a.m., right? At 9 a.m., I want to put in 2 to 3 trades. If I win those, then I'm done, right? I don't want to continue trading. Now the same applies if you lose trades, right? Now with trading, you're gonna lose. It's like inevitable. You can never perfectly predict what's gonna happen in the market. So if you end up losing 2 trades, then you're like, when I lose trades, I'm done, right? Like, no matter what happens, I don't try to, go in for another trade and try to make up my losses. It's just my way of managing risk, right? And when it comes to trading, it's all about managing your emotions. If you're losing 2 trades and you're going to go in for another trade, risking more than 1 to 3%, imagine if you end up losing that trade as well, then you're like even further down, right? So it's really important to manage your risk and follow a set of rules and be consistent with it. Now, kind of coming back to what we talked about earlier, how do we decide what to trade right now? Similar to this session, we have like live education sessions that happen every Thursday at 5 p.m. We've started that for like a couple months, and we've been continuing that, where we kind of educate, everyone in GC how to kind of use different ways or different ways of analyzing the market and different strategies to enter these trades, right? Now, if you're someone who's like, okay, I just kind of want to, take the signals and just input signals without really attending the sessions, we have that option available as well, because we send out signals actually every single day from Monday to Thursday at 9 a.m. and 12 p.m. Eastern on the Nitro channel. So if you're not on the Nitro channel, I suggest speaking to whoever got you started to get you on it, because we send signals every single day, and you pretty much plug in at 9 a.m., take the signals, and then just continue with the rest of your day. But we do, like we said, we do have live sessions where we teach you how to trade by yourself every single Thursday with different strategies and how to apply those strategies. So that's also available. Now let's quickly look at a trade example. This was a trade example that a trade idea that I called out actually today at 9 a.m. or 9:30 a.m. So if I was to take this trade, right, let's see how I do this. So let's read this trade first. So what it says is, I want to go for a 3-minute buy on the USD CAD, or the US dollar Canadian dollar exchange rate, and I want to enter at this price point, right? Now, obviously, this is an old trade that happened in the morning, so it's no longer valid. But if we were to kind of look at that on, let's say, our broker, right? The first thing we would do is search for Euro USD, right? Now, over here, in between the up and the down, so there's a lot of synonyms for the same word, such as like up, we saw earlier, call or buy. So up, call, and buy all mean the same thing. Down, put, and sell all mean the same thing, right? So when we're saying that we want to go in for a buy at 1.32860, right? All that means is that I want the exchange rate to match exactly what I said here, 1.32860, and I want to go in for a buy or an up in this case, right? Now, before we do that, we got to make sure we set everything else up, right? So over here, we set 3 minutes and we set fixed time. So we're going to click on the drop-down menu, click 3 minutes, and we're going to click on this toggle to make it fixed time. So all that means is you're going to be entering for exactly 3 minutes for that specific trade, right? And this is the amount that you'll be risking. So let's say if we're risking 1 to 3% for this specific account, it'll be probably anywhere in between like $2 and $4. So let's say for our scenario in this case, let's put a $3 trade, right? Now, obviously, right now, you know, our exchange rate is nowhere near what we called out earlier this morning. That's because the trade already happened and the market made its move over, you know, the last few hours, right? But let's say the price did reach that level. All I'm going to do is simply wait for that price to reach and then click on up. That's going to activate my trade, right? Now, what I want is for the next 3 minutes, I want my, you see this little blinking yellow dot that's moving up and down. I want that to end up being above my entry point, right? Since I entered for a buy or an up. Now, at the end of the 3 minutes, if my blinking yellow dot ends up being above my green line, then I win the trade, right? So right now, currently, I'm actually winning the trade. It's kind of just around my entry. But if it ends up below my green line, which now turned red because it's below my entry point, then I'm going to lose that trade, right? And like we said, losses are going to happen. So risk management is very important. So we'll come back and see what happens to this trade. Obviously, we entered at a different value, but this was just to kind of demo showing you what would happen when we entered for a trade. So that's pretty much it in terms of how to take a trade. Now, let's see what you guys kind of learned, right? So let's say we're looking at this chart right now. Let me know in the chat, what currency pair am I trading? So this is a screenshot that I got from earlier. Let's see if you guys can answer these questions. So what currency pair am I trading? Let me know in the chat. Anyone? GBP USD. Okay, cool, awesome, right answer. And what is my account balance? So all you have to do is kind of navigate your eyes on this little screenshot and tell me what the account balance is. So the account balance is, yeah, exactly, right over here, $1,000, right? So that is the current balance in your account. Now, let's say, right, remember we talked about risk management, right? Let's say we were risking 1 to 3% of my $1,000 account. What would be the dollar amount? Like, what would be the range that I'd be risking for that trade, right? So it's $1,000 account, and if we want to risk 1 to 3%, what would be a good risk management kind of process to follow, and how much should we be risking? Anyone? Seems like Juan knows all the answers. Anyone else? Juan, you can let us know if no one else has answered. All right, let's see. We got one new message. 100 to 300. Interesting. So that'll actually be 10 to 30%, right? So I think Alina answered 10. 10 would be, yes, 10 would be risking 1%. So anywhere between $10 to $30 on $1,000 account would be proper risk management if you're practicing 1 to 3% risk, right? Never mind, I'm bad at math. Yeah, so make sure if you're not quite sure, you can just take 1% of 1,000 on your calculator, or whatever your current balance is to find out how much you should be risking. And what is my potential profit? Let's say I risk 1% of my account, right? So this may be a little harder question for new people, but let's see if someone can get it. So if I'm risking 1% of $1,000, which is $10, what could be my potential profit, right? So remember we said all the payout is predetermined, right? And there's like a little hint on the screen that'll help you determine what would be my potential profit if I win the trade. Come on, 2 more questions, guys. We can do it. Anyone? Alina. Seems like you know the answers. Juan, 0.75. So 75% is the payout, right? So if you're going in at 1%, 1% of 1,000 is $10, and then 75% payout on the $10 is 7.5, right? So if you win that trade, you'll be making a profit of 7.5. So all you have to do is first figure out how much is 1% of 1,000, which is 10, and then you just do 75% of 10. That'll give you 7.5. And let's say if I win that trade, right, how much will my account balance go up to? So if I win that trade and I get $7.5 of profit, what would be my ending balance, or my balance after that trade ends? This is really simple math, so everyone should answer this. So 7.5 will be my profit, right? And then 7.5 plus that 1,000 would give me $1,000, $1,007.50, right? So that would be my account balance will go up to $1,000 and $1,007.5. Yeah, that was just to kind of test you guys if you guys are paying attention. If you guys kind of didn't follow anything, I'm sure this is being recorded, so make sure to check back on that. But pretty much kind of concluding everything. When it comes to binary options brokers, there's many out there. Kind of do your research, pick which one you like. The one I like to use is Trade Nitro. So that's the one that I use, but obviously make sure to do your research. And having said that, I'm open to any questions for the next couple minutes. If you guys have any questions, let me know in the chat. But if not, then I think we should be good to go. No more questions. All right. Cool. All right. Seems like there's no questions. So hopefully this was at some value for you. Hopefully there was something everyone learned from this, whether you're previously traded binary options or not. But if you have, any other questions, you can always reach out to me on Telegram. Happy to help. But having said that, we will catch you guys next time. Laters.